The United States is officially at war. This is not just a trade war. This is an economic war that the United States waged against the rest of the world. If you have been wondering how does World War III looks like, well, this is World War III. And just like World War II changed the course of history and established a new world order, the current trade war is going to establish a new world order. With this trade war, Donald Trump wants to fundamentally change the entire economic landscape of the world. And a lot of people look at what's happening and they don't understand because other countries are retaliating. China is retaliating. They've set up tariffs against US goods. Japan, South Korea, the rest of the world. But if you zoom out and think about it, there is a very clear strategy why Trump doing all of this. If you don't understand the final goal, if you can't zoom out and take a look at the big picture, everything that Donald Trump is doing makes absolutely no sense. I'm not trying to defend Trump. I'm not trying to judge Trump. I'm not trying to defend his actions. But what I'm trying to do is to figure out what is the grand plan. And in this video, you will find out that the final goal of everything that Trump is doing is to pay off the US government debt. So here in this video, let's try to figure out how exactly Donald Trump wants to use this trade war in order to pay off the entire debt of the United States and create a new world order that is much more favorable to the United States, and how you can take advantage out of it. If you're ready, give this video a thumbs up and let's get right into it. The world has turned into a place that we call corporatocracy, where corporations are ruling the world. It's not about nations, it's not about the governments, but rather it's about corporations. Companies such as Amazon, Apple, TSMC, Nvidia, Aramco, these are the corporations that are ruling the world. It doesn't matter who is the president of a certain country or what kind of laws they have. The final goal of any corporation is to maximize the profit no matter what tools they're going to use. And it doesn't matter whether it's an American company or it's a European company or it's an Asian company. No matter what the origins of that company is, at the end of the day, those corporations are going to run behind the profits. It's not about the loyalty, it's not about the continent, it's not about the countries. If we can make as much money as possible in that particular place, we're going to go there. We're going to rename ourselves. We're going to re-register ourselves. We're going to change everything possible in order to maximize the profits. And for the last 20, 30, or probably even 40 years, as the world started moving away from the tariffs and signing free trade agreements between the countries, corporations re-established their entire global supply chain in such a way where they manufacture their products in one place, they're registered in a completely different place, and they pay taxes in some kind of an island where the tax rate is 0% or maybe closer to that. And shareholders are in an entirely different continent, and everybody is making money and no one is paying taxes. And those corporations are taking full advantage out of the entire planet. And that's the kind of a world that we are living right now. And that's why if you look at some of these corporations, they're much more powerful than countries. Take Apple, for example, that's worth around $3 trillion or maybe $3.5 trillion. It's worth much more than some entire countries out there. It's much more powerful to be the president or the CEO of Apple than the president of any of those little small countries. The way those corporations works is that you build a product or a service, and then your job is to sell as much as possible of that product. The more you sell, the more profit you're going to make. Now you're filled with a lot of cash. You take that cash and you reinvest it back into the profits or the products or the services that you have built. So you are actually designing much better products or services. And now you can sell those services to even more people, or you can charge those people a much higher price, which will lead to much higher profits, which will give you more resources to invest in more products and services. And if you repeat this entire cycle over time, you're going to grow substantially. And within the entire process, you don't even have to make a lot of money. Like, you can literally run at a loss for 20, 30, even 50 years until you dominate the entire market. That was the strategy that Amazon followed, and right now Amazon has more planes than some entire countries. Amazon has more planes than even airlines who are in the business of actually having plane and flying people from one place to another. The only question remains is that where can you actually sell most of your products? That is the most fundamental important question that you have to ask yourself. That's where the United States has all the leverage. If you look at the entire US consumer market, it's something around 22 or 23 trillion dollars. And this is the largest market in the world. So if you're a company selling in the United States or having access to the US market is the most important asset or the most important market regardless of what you produce, whether you are producing oil, whether you're producing cars, technology, services, banking industry, it doesn't matter. If you want to build such a company that is going to grow and dominate and worth trillions of dollars, then you have to win over the US market because not a single market in the world comes even close. Now, let's take the biggest competitor of the United States, the entire European Union that has the second largest market. And if you look at their numbers, it's something around 13 or 14 trillion dollars. So what are you going to choose? If you had an option to sell your product in the United States or the European Union, now, forget about all the moral principles, forget about loyalty, forget about everything. Think about how those corporations are thinking. How do we maximize our sales? How do we maximize our profits? Are you going to choose to sell your product in the European Union, or you will choose to sell your product in the United States? There is literally no comparison or whatsoever. You're not even going to think. If you had to choose one of those options, you're certainly going to go with the United States. China isn't that far behind from the European Union. It's around $10 trillion, but it's nowhere close to the United States. So the entire market of the United States is as big as the European market and China combined. But what is easier, one country or one entire union that consists of 28 countries and China? Of course, it's much easier to just agree with the United States and sell your product in the US. And that's where the leverage of the United States comes into the picture. Because if you look at every other market in the world, they don't stand a chance. I'm not even going to talk about the United Kingdom. The UK market is so tiny, it's so small that it doesn't even compete either with the European Union or China, and it's far, far away from the United States. Countries such as Japan and India stand no chance or whatsoever. So if you're a company that is located in Japan, what are you going to choose if you had an option to build your product and sell your product only in Japan or only in the United States? In fact, even if you had the option to sell your product in the European Union and China, or just the United States, you will most likely to choose to sell your product only in the United States because that is the biggest market, that is the most stable economy. Because the next day something could go wrong between the relationship between China and the European Union. These two countries don't actually go along. The European Union always claims to be on the side of freedom and human rights. On the other side, China has a completely different system of ruling its country, which is why someday these two countries can fall apart. That's why you as a country, you'll most likely just go and choose the United States. It is the safest option for you. Let's take an example of LVMH, the company that produces a lot of luxury brands such as Dior. And if you look at their sales, the largest market is, of course, Asia, but that's the entire Asian continent. That is China, Indonesia, Malaysia, Thailand, Middle Eastern countries, and so on and so forth. And all of them are as much as just one single market of the United States. And if you compare the United States with Europe, then I think LVMH will easily just abandon Europe, even though that LVMH is a French company. So if you actually force these countries and you put tariffs on all of these countries, every single one of them is going to choose and come to the United States, build their factories in the US because nobody can afford to lose the US market. If one company is going to choose the United States, well, their competitor is going to abandon the United States. Over the next couple of years, one company is going to become insanely rich while the other company is going to go bankrupt or will lose a huge market share, which is why investors are going to sell the stock of the first company that abandoned the United States and will massively invest in the company that actually chose the United States and complied with the tariff or simply moved their manufacturing back to the United States. TSMC is another great example. This is the company that manufactures the most advanced chips out there. So they manufacture chips for companies such as Apple, Nvidia, Qualcomm, AMD. Do you see a trend in the clients of TSMC? All of them are US companies. So if TSMC had to choose between literally choosing the Taiwanese market or the US market, they will easily just abandon Taiwan. They will not even do business in Taiwan. They will literally pack up their stuff and just go to the United States and manufacture everything in the US. Especially when TSMC manufactures very high advanced technologies. Jaguar Land Rover is a British company, but if you look at their sales, most of their sales are in North America, primarily the United States. Of course, they sell a lot of cars in the UK as well, but if they had to choose between North America, the United States in particular, and UK, Jaguar is going to choose the United States because they're going to make far more money in the United States than they will ever make in the United Kingdom. Especially if you were, let's say, the head of Jaguar and Land Rover, and you ask yourself, what's the trajectory? Will the UK economy keep growing? Well, if you look at the numbers, you know that's not the case. But will the US economy keep growing? Well, absolutely. So where are you going to make most of your money? You will make it in the United States. So you will literally abandon the United Kingdom and you will move everything, every single manufacturing back to the United States. And guess what? Jaguar and Land Rover are not even British companies anymore. They're owned by Tata Motors, and Tata Motors is an Indian company. Do you think they care about the UK or they care about helping and profiting their shareholders? Of course, that's what they will choose, and that's why they will easily abandon the UK and they will go to the United States. And that's the case with every single company in the world. And that's why when Donald Trump is throwing all of these tariffs, he's very confident that every single company is going to choose the United States. He understands the value of the access to the US market, because the access to US market is going to give you so much power and so much leverage over every other company around the world. So the US imposing a 25% tariff on its products is not equivalent as China imposing a 25% tariff. It's not equivalent to the European Union imposing a 25% tariff, because it is going to have a significantly different impact on most of these countries. And now the question is that, how is that related to the US national debt? How is that even going to solve or pay for the US debt? Wasn't that the question of this video? So the final goal of the trade war that the US started is to weaken the dollar. If we can weaken the dollar without causing massive inflation, then paying off the US national debt, which stands at around $36.2 trillion, is going to get a lot of easier. There is something called inflation within our economy. And inflation basically means that the more money we are going to throw into the economy, the less valuable those money is going to be. And the fact that the US dollar is the global currency reserve, it allowed the United States over the last 80 years to print as much money as possible. And that's why the United States can run a $36 trillion debt. It can run a huge deficit. It can pay for everything because there was so much demand for the US dollar. But that limit is going to an end. However, printing so much money has caused massive inflation over this time. And that's why if you go back, for example, to 1970, you could buy the coffee that today you pay $3. Back in the days, it would cost you 25 cents. And as the Fed started printing more and more money, the value of the dollar became less and less, and the exact same goods and services, their prices started to skyrocket. And if you understand this basic, simple terminology, then you will be able to understand how Trump is actually playing this game. If the US government right now starts again printing massive amounts of money and lower the interest rates to the bare minimum, it's again to cause massive inflation. So the question is that, how can we actually print a lot of money? How can we lower down the interest rates to absolute minimum without causing massive inflation? Because 2020 showed us that if we are going to be very aggressive with our policies and lower down massively interest rates or print massive amounts of money, it is actually going to increase massive inflation. And the easiest and the simplest way for you to realize that is to simply take a look at house prices. House prices over such a very short period of time have increased in value by around 80%, 70%, or even in some places by around 100%. Because if you actually take the consumer price index, which is the CPI, then they actually manipulate those numbers a lot. And that's why taking a look at house prices is a much more accurate representation of the real inflation than the inflation numbers that the Fed is reporting to you based on the CPI report. The national debt has been growing since 1960s, but over the last 2 decades, it has accelerated a lot. And part of it consists of intragovernmental holdings, and most of it consists of the debt that is being held by the public. And a huge part of that debt is being held by other countries. For example, Japan holds around $1 trillion of the US debt. China holds $759 billion. The UK holds $723 billion, and so on and so forth. So there is a list of 10 to 15 countries that hold most of the US government debt. And now the question is that how do we actually pay $36 trillion? That's a very good question, right? Because $36 trillion is a lot of money. Right now, the US government is raising around $4 or $4.2 trillion in taxes. And that's not enough because the government has to spend that money on infrastructure. The government has to maintain the world's largest and the most powerful military at around $1 trillion. There are social security payments, there is Medicare, there is Medicaid, and so on and so forth. So we can't take the $4 trillion that the government annually is raising and start paying the debt. It makes no sense or whatsoever. It's probably even closer to like $5 trillion. But on the other side, the government is actually spending around $7 trillion. So the government is already running a deficit of around $2 trillion. I'm not even talking about balancing the budget. So there is literally no way for the government to actually pay off that debt. But there is a way, and that's the way that Donald Trump is actually trying to implement. What if we hypothetically devalue the value of the debt that we have? Paying off that debt will be significantly easier. Just like back in the days, the dollar was much more valuable. If you take today's $100, for example, out of your pocket and somehow you're going to teleport back to 1970s, you're going to buy a lot more coffees than you can buy actually today in 2025, for example. But if you do something like that, it is going to cause massive inflation. So there is a way for the government right now to print massive amounts of money without causing massive inflation like in 2020 and 2021? Well, theoretically, it's actually possible. Let me show you. First of all, we have to create massive demand for the dollar. If everybody suddenly wants to buy a lot of dollars, then we have to give them those dollars somehow, right? Imagine if the rest of the world tomorrow stands and they will start screaming, "We want dollars." How do you make people want more dollars? How do you do that actually? So if you can somehow manipulate the global economy in such a way that more and more people will demand dollars, then you will have an excuse to print more dollars and give it to them, right? Because you're not causing massive inflation. Yes, you're devaluing the dollar, but it's not actually causing real inflation because people are actually getting those dollars. How do you do that? Well, you start imposing a lot of tariffs. So every time a company brings their goods and services to the United States, suddenly they have to pay a tariff of 25%, 50%, or in some cases, 100% in tariff. So in order for me to pay the tariff, what do I need to do? I have to buy the dollars. So I'm going to use my foreign currencies and I'm going to buy the dollars in order to pay the US government. Suddenly, we have artificially increased the demand for the dollar. What if I do that across everything that will get imported to the United States? Suddenly, I have created massive demand for the US dollar. But what if those companies will come actually to the United States and they will move their manufacturing back to the United States and they will not pay the tariff? What happens next? They will come to the United States and they will build their factories in the US. But in order for TSMC or Apple or Nike or any company, for them to come to the United States and build a factory, they need to hire American people. They need to buy steel from an American company. They need to buy trucks and cars from American companies. And in order to do that, they need US dollars. Can you come to the United States and pay in Chinese yuan? Can you pay in the United States in Japanese yen? Can you pay in the US with the European Union's euro? You can't do that. So you have to use your foreign currency and buy a lot of US dollars in order to build your manufacturing back in the United States. And that massively increases the demand for the dollar and gives you an excuse to print more dollars and give it to them. Do you understand how it works right now? By manufacturing everything in the United States, you are going to produce a lot more and you will boost your exports. So back in the days, you used to bring those iPhones back to the United States. You used to bring cars from Mexico into the United States. But now you're producing it in the United States and you're exporting into the rest of the world. Now the rest of the world needs iPhones, but in order to buy those iPhones, they're coming from the United States, so they have to buy them in dollars to bring them back to their countries. And in order to do that, they need to buy dollars. Again, you're increasing the demand for the US dollar. Suddenly, the rest of the world wants much more dollars. You're not going to let those people down. You are a very wise and generous person, so you will print a lot more dollars and you will give it to them because they're screaming for more dollars in order to do business with the United States. Since there are right now much more dollars than there were in the past, the dollar gets weaker. And when the dollar gets weaker, it's not just the new dollars that gets weaker, but every dollar that has ever existed is going to become weaker. The dollars that are being held by foreign governments, the dollars that are being held by the US government, the dollars that is being held by the Fed, and even the debt that is being held by the dollars is going to become much less valuable than it was in the past, which makes the $36 trillion debt much less valuable and it's going to be much easier to pay it. And that is the entire strategy of massively increasing the demand for the dollar and devaluing the value of the debt that the United States has. Think of it like this. $1 million today is very different from $1 million that was 50 years ago. So $1 million 50 years ago is as much as $5.7 million today. They're not the same. So over the last 50 years, the dollar has lost 82% of its value because every single year, the government has been printing massive amounts of money. So for example, if you actually borrowed $1 million 50 years ago from somebody and you still have to pay them back $1 million today, are you paying them $1 million? Well, technically, in numbers, you're actually paying them $1 million, but the value of that $1 million have lost a lot more. Like, it's much easier for you to make $1 million this year than it was, for example, 50 years ago. For $1 million today, you can buy much less things than you could buy 50 years ago. For $1 million, you could buy a really nice house 50 years ago. Today, you can't buy that a great house for $1 million. $1 million 50 years ago is as much as $175,000 today. That's how much the dollar have lost its value over the last 50 years. So even though that the US right now has like $36 trillion of debt and that debt grows tremendously, the United States can suddenly simply print a lot of money to pay off this debt. It makes no sense whatsoever. It is going to cause massive inflation and it's going to destroy the US economy. Before we do anything like that, first of all, we have to create massive amounts of demand for the US dollar. When there is so much demand, we're going to print so much money and then we're going to devalue the dollar. Now, the value of the dollar, for example, it's going to lose 50% of its value. Suddenly, the $32 trillion worth of debt is going to become $16 trillion. Well, technically, in numbers, it's still $32 trillion, but the real value of this $32 trillion is going to be $16 trillion. Now, assuming that the devaluation is going to be 50%. And now ask yourself a question. How the devaluation is going to impact you? Imagine you have a specific income. That specific income, when the dollar is devalued, will buy less things. Imagine you have dollars in your bank account. Now your dollars will buy less things because the dollar is going to get devalued. But when you devalue the dollar, yes, the paper money is going to lose its value, but the assets or valuable assets are going to rise in value. Just go back to 2020 when the government printed so much money and caused massive inflation. Yes, they told us that the highest inflation was like 7 or 8%, but house prices suddenly increased by 50, 70, or maybe in some cases by 100%, even probably more than that in some places. So the only way that you can protect yourself from this devaluation that's about to happen is by buying the right assets. Now, do not just go and randomly buy assets that you don't know. Do not simply go and buy houses. Do not simply just go and buy stocks that you don't know nothing about. First of all, educate yourself. Understand how the market works. Learn how everything works. Understand the financial system. And when you have all of that, then you will know what to buy and what to avoid. Because if you buy the wrong asset, that wrong asset can significantly drop in value. And if you want to invest with me, then you can check the first link in the description. That's it for today, guys. Thanks for watching, and I will see you in the next one.